Inflation in Canada hit its lowest point since 2021 and it sparked a lot of conversation around whether we're going to see future rate cuts at that September meeting with the Bank of Canada. My name is Miles Noack of the Noack Mortgage Team, powered by Indy Mortgage, and today we're going to take a really quick dive into this recent inflation data, what it means for rates moving forward, and what it means for the broader economy. But before we dive into this, do me that favor, hit that like and subscribe button so more people like you can see this video, and let's jump into it. As mentioned, out of the Bank of Canada, we got the inflation data this morning, and it came in at 2.5%. Which is the lowest it's been since March of 2021. And it has sparked those conversations about future rate cuts, and it's even caused some people to make comments about how the Bank of Canada needs to step it up and lower rates further and faster. Now, to get into this, we want to look at the reasons we're seeing inflation go down. So what are some of these things that are causing this downward pressure on inflation? So if we look at it, the first and foremost is, of course, interest rates on mortgages. Interest rates have gone up and stayed up dramatically for the last couple of years here. It's put a lot of pressure on borrowers, pulled some money out of their accounts, made it so they have less disposable income. It's going to put downward pressure on inflation. It also puts people in a position where they can't borrow as much money through mortgages or HELOCs for those purchases. So yeah, downward pressure all around. Now, the other thing and the second thing we want to look at is, of course, supply chain issues. We were suffering from supply chain issues before, and we had been for a while. It seems they're sort of alleviating themselves, which is good and going to add some downward pressure, but we'll have to keep an eye on that and see what happens further on. And of course, third, consumer demand. As people have less money because the costs of things have increased, we see less consumer demand on goods and services, which also puts downward pressure on inflation. Now, we want to back this information up with some data. So we took a look at the CPI, or Consumer Price Index, to see what sort of things are really falling when it comes to costs and pushing down that inflation rate. And we found that some of the major essentials, such as rent, mortgage costs, and food, still remained really, really high, while the things that went down were phone services, travel, and the actual cost of a home. So it's kind of interesting when you look at this. Yes, we're seeing downward inflation, but it doesn't really feel like it, considering every time you go to the grocery store, you have to spend a small fortune just to fill your fridge up with some, good food and maybe some mac and cheese in the cupboard. So the big question here is inflation actually at 2.5%? It's a question a lot of people are asking. I don't necessarily have the answer to that, but we're just going to have to keep a really close eye on that. Hopefully, soon we'll see some downward pressure on things like, of course, interest costs and rent. And hopefully following that, we'll see some downward pressure on the food costs as well, because I find it a little crazy to think that a Canadian's highest cost is something as essential as groceries. I mean, come on. Now, one of the other things that's been brought up is deflation. Experts like David Rosenberg have been arguing that the Bank of Canada isn't cutting fast enough and putting a bit of pressure on them because there is a concern about a deflationary period that could be caused if they don't lower rates fast enough. They don't want inflation to hit 0% or less because that can have a negative effect on our economy. In conclusion, and to sum all of this up, inflation is down, we're seeing more pressure, and I think inflation is probably going to remain low or continue going down moving forward. As it's at 2.5%, which is really, really, really close to that Bank of Canada target of 2%, are we going to see rate cuts in September? I try and be skeptical. I was wrong before. If you saw it, I was on a podcast, the Real Estate 100 show with Nolan Mathias, where I made a bet that around this time this year, we'd be down by 1%. I was, of course, wrong, and I had to jump into the ocean while people were gutting and cleaning fish from a fishing trip. Needless to say, the water didn't smell great, and now I'm a little more cautious around my predictions when making bets involving fishy water. That being said, do I think we're going to see a cut in September? Yeah, I wouldn't be surprised. Is it going to be something higher than a quarter point? Probably not. I think the Bank of Canada wants to take things slow and steady so that they can keep tabs on things as they drop rates and watch that inflation rate. Now, I want to know what you think. Post your comments below on whether you think inflation's going to stay down, whether you think we're going to see further rate cuts from the Bank of Canada, and what you think is going to happen over the next 12 to 24 months. And once again, if you could do me that favor, if this was helpful to you at all, hit that like and subscribe button. My name's Miles Noack. Thanks for tuning in. We'll catch you next time.